Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 13th of May, 2023, and this is the weekly technical analysis for the euro, the cable, and the Aussie dollar for the third week of May. And you'll see similar structure and reaction across all these three majors, with all of them falling very weak, especially the last couple of days at the end of the week, which means that we'll probably see that the US dollar has climbed up as an inverse correlation. And looks like probably the euro has been the weakest, falling right from the start of the week, as pound and the Aussie dollar did attempt to test resistance and before being rejected and then falling through for the rest of the week. And we'll see why as we take a look at the highlights from last week with the CPI, US CPI news on Wednesday, and that was that peak, that spike on the Wednesday. And then look ahead for next week with the retail sales coming out for next week. All right. Looking back at last week, the key news was the US CPI data, which came in as expected for the month-to-month figure, but for the year-over-year, it was slightly lower, just 0.1% lower. And the markets did push up higher initially against the US dollar. But then by the end of the day, it started to pull back lower. And upon realization that ultimately the figure is still high overall, and Fed is still going to be concerned and likely still need one more rate hike in the next meeting in June to still continue to try to tame inflation, which is a big worry. And already the Bank of England did highlight that as well, and they did project even higher inflation figures for the end of the year, overall inflation for the year, and which is why they did have to follow through and raise interest rates by the 0.25% as expected. But the worry is still the high inflation figure, about 10%. And on Friday, the UK GDP had a negative figure, and this drove the cable and sterling pairs further down and gave them a really bearish momentum boost there. So inflation is still a problem everywhere, and next week we'll see what the retail figures will look like for the US, and as well as jobs for the UK and Australia, along with the ZEW, economic sentiment for the Eurozone. And light news for the US side, for the US economy. And apart from the early news on the Tuesday, so after that, it was going to be driven basically technically. The jobs may not feature much other than to either reinforce the central bank's decisions and to see how they may look at the data for the next potential increase if required in June. Okay, so for last week, when we take a look at the US dollar, we'll likely see a recovery from the US dollar against the major pairs with this weakness in the majors. Okay, let's move back to the analysis. Let's begin with the euro. And finally, the break of this trend line has triggered the breakdown of the euro from after failing just below the 111. Did try the last month, at the end of last month, to almost hit that, but failed to do that. It just hit at 110.95. So forming what looks like a triple top formation. And from the last week, after failing to break out higher, it started the week, right? From Monday, very weak, and attempted to break down below the trend line and could not climb back up above 110. And it did try to rally a bit on the Wednesday with the US CPI data, but then there wasn't enough bullish momentum and eventually fell back lower, and probably fueled by or influenced by the UK GDP figures as well on the Friday. So did break below the 38 fib retracement and the daily 55, this interim support. Looks like it's targeting the next fib at the 50 fib retracement and the 108 area. So let's bring this back up to the 110. That will be the interim resistance. Key resistance is still safe at that level. And a key support now at the 108 and the 50 fib, along with this previous swing high, I believe. Oh, from way back 3 years ago, from a swing low area, and then tested as a swing high. Just a quick look on the weekly time frame as well. You can see how much the bearish engulfing candle is for the week, and looking very bearish in the short term. Let's also extend this support line here, support zone, and that's at the 107.60 area. That could, if that support breaks at 108, that's probably likely the next area of support. Okay. So this coming week, there's only the Eurozone ZEW economic sentiment, and then on Tuesday as well, the Tuesday night will be the retail sales figures for the US. So let's see how much support these areas will provide. Otherwise, it's a very ominous looking bearish engulfing candle for the week. But this area of support should hold on the 107.60. All right. Let's also compare this with the US dollar index, the DXY. Okay, here's the DXY. And as expected, you'll see the inverse correlation and the last 2 days of the week pushing up very strong, breaking above this horizontal resistance level and breaking through the 102 round figure and climbing to 38 pip retracement, which is basically the same as the euro, with retracing back to 38 pip. So managed to find support from these levels and climbing up above 101. Now it's just above the 102.30 area, and if there's a bullish continuation, it's going to try to climb up to the 50 pip retracement just below the 103. That's next round figure that it's going to attempt to target. So let's move this interim resistance here. It has not broken that yet. This key support, let's move it up to 101 now. And these levels of support from this low trend line managed to provide support there. And 103 and the 50 pip will provide the next key resistance zone. And as highlighted this week, there's only US retail sales from the US side. And on a weekly time frame, you can see that bullish engulfing, just like the bearish engulfing for the euro, and climbing up and attempting to attack the 103 level and the weekly 55 EMA just above that 103.10 area. Okay. So the 100 area is still very safe. That's not going to be broken yet. Okay, so we'll see how much bullish momentum there is for this week for the US dollar, with no major news other than retail sales, and we'll see technically where US dollar is going to push up to. Okay, let's move back to the other majors. Let's move on to the cable. And this week, there's only UK jobs to look up for on Tuesday, and then the exposure to the US retail sales figures. Take note that the last retail sales the previous month was negative. It was negative 1%. So, and this projection, this estimate for this coming Tuesday is a positive 0.8%, which has been positive for quite a while. So if there's any major surprises, then it could be a shock to the market for the US dollar. But for now, you'll see that was the reaction from the start of the week, and attempted to break above this resistance, but was blocked. was the resistance zone that we marked last week, just under the 138 pip extension, and quickly faded off with the Bank of England's announcement, rate hike, and then followed by a very poor GDP figure on Friday, and falling into the swing high area, interim support, and with the lower trend line providing support coming up. So we'll see if there's enough momentum to break through this support and continue to drive lower towards the 786 pip retracement at the 123 round figure, which is the next area of support here. So this is the interim support zone, and then the critical support zone at the 123 area. And this resistance zone, which we identified, was the swing low, and a swing low from way back in August 2020, and which was retested in last year, and now coming back up to test it again, but was quickly rejected. So this is a very strong resistance level. And on the weekly time frame, you can see that rejection from exactly from that resistance level, coming back down to the swing low, swing high 100 pip area, which is just at the 124.50, 40 to 50 area. So that close at 124.48. That's for the support below the 123 as well. But this trend line now will be a critical one, as well as the daily 55 EMA, which is expected to provide some support around these previous swing lows. Okay. All right, let's move on to the Aussie dollar. And likewise, Aussie dollar, Australian economy is also reporting their jobs figures on Thursday after the US retail sales figures. And after a recovery from the 66 round figure from the end of last month, all the way back up to 68, spiked through 68 twice, and then we got rejected at the daily 200 EMA and the 38 pip retracement area, and falling hard the last couple of days of the week, as with the other pairs as well. And now has closed right at this previous support zone as well, at the 66.40 area. So let's extend this zone here. And the next key support at 66 round figure, where it started to recover from. So now it's in danger of returning back. So 3 attempts to break this 68, 2 attempts to break 68, and 1 fail, all 3 at the daily 200 EMA. And this zone of support was from end of last year, and from these support areas. Let's see how long that will hold. And on the weekly time frame, it's you can see the rejection and the upper wick that formed. Close right at the end of the week, bearish, as basically a dark cloud cover. So still ominous looking, and we'll see how much bearish momentum there is to break it down further. And this was the previous trend line that it broke down from. Okay. So let's see how much bearish momentum there is to drive this lower, especially with no major news to trigger any turnarounds. So if this support zone breaks down, the recent swing lows have to provide some support. Otherwise, the next critical support zone will be at a 65 round figure. But we'll see how much lower the Aussie dollars can dip. Okay. All right, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.